Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, February 25th, 2009. The pound-dollar pair, after rising overnight to the 1.46 level, fell steeply in the remainder of European trading and extended its losses in New York trading. The pair was down to the 1.4230 level at one point, which amounted to a change of 370 pips. That brought the pair to a new low for this week. The pound was also pressured against the euro. The pair had been in a downward channel the past 8 or so sessions, but broke above its line of support today in a 120 pip rally. That brought the euro up to the 0.8950 level. The break of resistance was a catalyst for the weakness in the pound saw in other pairs, including its crosses against the yen and Swiss franc. The euro-yen pair stalled today at the 125.15 level after a rally that amounted to 500 pips yesterday. Stocks in Europe ended lower, wiping away earlier gains, though banking shares rose. The financial sector was given a boost that carried over into European markets as Bernanke played down any notion of nationalizing major U.S. banks in his testimony today before Congress. Japan's exports fell heavily in January, resulting in a 45.7% drop compared to a year ago. That weakened the trade balance for Japan, putting the non-adjusted trade deficit at a record 952 billion yen. With key trading partners, the US and Europe, in recessions, weak global trade is expected to continue during 2009. U.S. existing home sales slumped 5.3% in January to a seasonally adjusted annual rate of 4.49 million, the lowest sales pace in 12 years. That completely undershot expectations of a small rise. Some potential buyers held back on purchasing a home as they awaited details of the incentives included in the Obama administration's stimulus plan. About 45% of the sales in January involved so-called distressed sales of homes in foreclosure or short sales by homeowners who sell for less than what they owe their lenders. Those properties have the steepest discounts. On the whole, prices were down 14.8% compared to a year ago, while inventories of unsold homes fell by 2.7%. The euro-dollar pair paired yesterday's gains, falling from an intraday high near 1.29 to support below the 1.27 level. The weak housing data from the U.S. pushed the pair down as traders looked to safe haven in the greenback. U.S. stocks were down in the morning, adding to risk aversion during the New York session. The U.S. dollar-Canadian dollar pair surged in New York trading after trading around the 1.24, 1.2450 area overnight. The 170 pip rise came also as a result of increased demand for safe haven from the greenback as U.S. stocks dipped lower. After that initial rally, though, the pair fell 80 pips to the 1.2525 area. Taking a look at some other fundamental releases today, GDP in Germany declined 2.1% in the fourth quarter of 2008, which is the same figure reported in the advanced release. The economy has been constricted by the pullback in global trade as a result of the global recession. Exports were off 7.3% in the quarter, and investment in plant and machinery declined 4.9%. Companies are spending less on machinery as they see lean economic times ahead, and are also cutting back jobs, which weaken consumer confidence and household spending. The UK economy contracted by 1.5% in the fourth quarter, which also matched its advanced estimate. It's the sharpest contraction since 1980. The economy was hurt by a pullback in spending. Private consumption was down 0.7%, capital spending was down 2.3%, and exports fell 5.5%. The Bank of England has cut the benchmark interest rate to 1% in response to the crisis and may bring its rates even lower in next week's meeting. Central bank policymakers have also asked for the power to create money in order to help stimulate the economy. A lack of lending by banks is confounding weak consumer confidence and spending. Tonight, New Zealand releases its trade balance and data on business confidence, while Australia will reveal its leading index and private new capital expenditure. Overnight, Germany will post data on unemployment change, consumer confidence, and consumer prices. Continuing overnight, the Eurozone will reveal its end-of-the-month economic sentiment indicator, which includes measures of consumer confidence and business climate. The UK will also release a measure of housing prices. Tomorrow, the U.S. has 3 releases: its durable goods orders, weekly jobless claims, and new home sales. And that wraps up today's broadcast. Thank you for joining us here at cmsfx.com, and happy trading.